Welcome to The Explainer. Today, we're going to cut right through the noise of AbbVie's latest earnings call and give you the essential financial takeaways in just a few minutes.
So AbbVie just dropped their Q3 earnings, and the big story coming straight from their CFO, Scott Renz, is pretty simple. Outstanding results and a really strong outlook. We're going to break down exactly what that means.
Okay, here's the game plan. We'll kick things off with those impressive Q3 results. Then we'll look at their upgraded forecast for the whole year. After that, we'll see what's on tap for the final quarter, and this is the important part, how AbbVie is using all this success to fund its future. All right, let's dive in. First up, let's get into the numbers that really defined AbbVie's stellar third quarter. So right out of the gate, we're looking at adjusted earnings per share of $1.86. Now, that's a full 10 cents above what they were guiding for, a really solid beat. And what drove that? Well, it was fueled by nearly $15.8 billion in net revenue, which shows you some really healthy operational growth. We're talking over 8%.
Okay, now this is where the story gets really interesting. The operating margin, it came in at a solid 30.9%. But, and this is a big but, look at that other slice. That includes a huge 17% hit from what they spent on R&D acquisitions. So what does that tell you? It shows they're not just banking today's profits, they're aggressively pouring money into the science that's going to fuel their future. That's a key piece of the puzzle right there.
Okay, so a fantastic Q3 that's in the books. But what does that mean for the big picture, for the rest of the year? Well, that brings us to their upgraded outlook. Get this, for the third time this year, AbbVie has boosted its full-year earnings forecast. I mean, you can't get a clearer signal of confidence than that. And that confidence is backed by a bump in their revenue forecast. They're now expecting to pull in approximately $60.9 billion for the year. So you might be wondering, where's all this extra growth coming from? Well, it's kind of like a balancing act. You've got their big immunology drug, Skyrizi, and their whole neuroscience portfolio doing some heavy lifting and pushing those numbers up. But at the same time, that's being offset just a little by some softness in the aesthetics market. All right, 3 quarters in the bag, and they're looking strong. So what's the forecast for the final lap of 2025? They're projecting a really powerful finish here, with the net revenues expected to top $16.3 billion.
And that translates to adjusted earnings per share landing somewhere between $3.32 and $3.36 for the quarter.
Okay, so a company is making a ton of money. That's great. But the real question is, what are they doing with it all? And that brings us to AbbVie's capital allocation strategy, basically their game plan for spending that cash. And when we say a ton of cash, we mean it. In just the first 9 months of the year, AbbVie generated a massive $13 billion in free cash flow. Just think about that number for a second. And that cash gives them the firepower to hit all their key priorities. Number 1, keep that strong and growing dividend flowing to shareholders. Number 2, keep hunting for deals and investing in future growth. And number 3, shore up the balance sheet. It's a really clear, disciplined approach. And they're not just talking the talk. To prove that commitment to shareholders, they just announced a 5.5% hike in the quarterly dividend.
That cash also leaves them with plenty of dry powder for business development. And they've been busy. The CFO mentioned they've already closed around 30 deals since the start of 2024, constantly scouting for outside innovation.
So let's wrap this all up. AbbVie is firing on all cylinders. They've shown incredibly strong performance, and they have a super clear strategy for what to do with their success. And that leaves us with a big, multi-billion-dollar question for investors. With all this cash and a proven track record of making deals, where will they aim that financial firepower next to lock in growth for the long haul?